Gold prices hitting near the monthly lows, just above April 4th's 1284 low. We got down to 1285 today in June gold. Just above key support at 1280. That's going to be the line in the sand level we haven't seen. You got to go back to December of last year, and it just seems that the market has found a way to bounce off this level without going through it. Now, we haven't really touched the 1280 level this year, but we've gotten a few. We've touched it or neared it a few times. So right now, that's excellent. It's very good support. The market holds there and sees a little bit of a rebound late in the session. But ultimately, right now, things are looking a little bit more negative. Ever since we traded through 1300 going south, the market has looked like very much a one-way trade down towards that 1285 level. And if you look at what the dollar's done, yes, the dollar has remained strong, and the dollar is near its year-to-date highs. However, it was really a non-event today as gold traded more, I think, off the optimism of what we could see out of a Chinese-U.S. trade deal, optimism over U.S. earnings. We got the bank earnings that started this week, and I think that ultimately the fact that the Fed may look to be maybe more hands-off than was expected a few weeks ago. Another reason why you're seeing gold prices come off, and it's more evidenced in the CFTC report that showed speculators, while they added to longs ahead of the FOMC minutes last week, we can probably bet our bottom dollar they were the first ones out the door when those minutes weren't as dovish as expected. So I don't think the market's telling you that the Fed's going to be tightening rates anytime soon, but they did sort of suggest that they weren't going to be cutting either, and the Fed may look for other ways to tweak policy if they're going to do that, whether it be balance sheet, whether it be some kind of quantitative easing / tightening cycle. Right now the Fed, I think, is still waiting for the numbers to all come in line. But gold right now not finding favor given the fact that equities remain strong. Yields are slowly creeping higher, still very low given the environment, but yields are creeping a little bit higher here. And ultimately, I think that there's other areas where you can find more bang for your buck in risk assets. And so riskless assets like gold are finding, more sellers or exiters, as it would be. So right now, I think gold prices, if they ran above 1280, I think that's very significant. If we dip below 1280, we need to settle below it. Then things could start to get a little slippery on the way down to 1250. I don't think we get there all in one shoot, but that would be the next target. I think that there's way too much risk out there continuing when you look at geopolitical risk, you look at U.S. and global economic risks, likewise with central banks continuing to keep their hands in the cookie jar. I don't know how currencies can sustain these high levels for much longer, so I think that ultimately that will be another hedge and gold will find favor again. Getting back above the 1300 level may seem a bit difficult in the short term, but in the long term, I think that that's the play. And I'm not, until some event occurs or some catalyst moment causes the dollar or gold to bid higher, I think that 1280 level remains pretty significant. If we get through it again, it could get slippery very fast, but we haven't seen that since late last year.